We will be diving into the monthly market update for August 2022, and it's one of those things where we will understand a little bit more where rates are, what the market's like here in Portland, Oregon, and diving a little bit more into the data as I like to do. Now let's dive into this content and see what's going on. My name is William Singh. I'm a local real estate agent here in Portland, Oregon, and if you find any of this content helpful or you find a little bit more insight on this, it would be great if you could hit that like button and also subscribe as well. So let's dive into this data. So one of the first things that kind of pops up is going to be the inflation. This is something that has been going on for a very long time, or at least more recently where it's been spiking up quite a bit. Now, you probably saw gas prices and just the price of everything just kind of shoot up. And you'll notice here, this is the national average for the consumer price index, and basically measures inflation. So we peaked at 9.1%, and now we're looking at closer about 8.5% as the current inflation. So with those increase in rates, we will see basically decrease in that inflation. And this is one of the major ways that the Federal Reserve, or the Fed, controls the inflation in America. So if we're taking a look at this is one of those things where if you look at all these recessionary periods, so all these gray areas are going to be recessionary periods, during that time you usually start seeing those interest rates drop. And then once the inflation, or basically once the recessionary period is over, this is usually where the Fed will start raising rates afterwards. So you'll have these short periods of a recession, and then from there you'll then have those rates that will start to basically climb back up once we get out of that economic recession. And this is kind of the same thing that's true for a lot of these recessions. So if you always look at, like, let's say for example the 2008, we see those a drop in the interest rates, and then we kind of see them go back up and down, hover around. And historically speaking, we saw really, really low rates in between 2020 to 2022. Now, whether or not we get to those rates ever again is going to be a different story, and just one of those things where you can hope that rates will go down that much again, but there's going to be some need for a serious world-changing event in order for that to happen. But just one of those things where, as buyers, just know that if you're looking to buy right now, the likelihood of those rates decreasing after a recession or during a recession is typically very high, or at least historically speaking. So something to kind of keep in mind. Now, we're looking a little bit more closer at Portland, and you're going to notice that we have a huge spike in the weeks of supply or months of supply. Right now, we're at 9.6 weeks of supply, which is closer, just north of 2 months of supply. And this is frankly really good for buyers right now.
Yeah, we made it.
You used to not have very many options. There weren't a lot of things where you could really choose from. You were just basically going against 5 different offers for the very limited amounts of homes. So you'll notice that we're actually getting closer to the pre-pandemic ones, which is this 2019 blue line. And when we're looking at these two lines, this is 2020, which is the red line, and then the orange line is 2021. So just one of those things where you can kind of see, like, we are actually getting closer to a normal market, which is about 2 to 4 months of inventory. Now, in terms of the pending sales, so this is how many homes are getting sold at a time, we notice that we see a huge drop off here. So this is part of the reason why we're having so much more inventory, because pending sales kind of tells you the velocity of how many homes are being bought. So with this, you're seeing a lot more homes starting to come on the market, and we're also starting to hit kind of that downward trend for the seasonality. So once we really get past October and really start hitting Thanksgiving time, that's when we'll start to see a little bit more of this further dip. And then once we enter into the new year, usually we'll hit January, and then January, February, it'll start basically getting stimulated again. If you are going to be listing a home, just know that typically the times when it is the slowest is going to be between that end of November or mid-November to December, because no one really wants to be moving during the holidays. So that's one of those things for buyers. If that's a time that you want to buy a home, you're going to have far less competition. And then another time is going to be late July to August. And this is something that just happens on a yearly cycle. And for 2020, that was a little bit weird because we didn't have those lulls, but we're starting to see a little bit more of that seasonality starting to come back in. Now, the medium sale price for this, medium sale price, if I can get this right, is still relatively high. If we're looking at 2019 levels to 2022 levels, it's still relatively high. It has dipped down a little bit. So one of those things where as we're starting to see more and more inventory come on, I do expect these to kind of flatten out a lot more and maybe not have quite as much of a steep pitch to them. And especially since we're kind of moving more towards the end of the year, we're not going to see as much of we're going to need to see a little bit more homes that are a little bit more aggressive in terms of sale price. So another great indicator for the fact that we're having more inventory staying on longer, and a good note for sellers is that when we start seeing this start to increase, and as I'll kind of dive into the local market data, you'll see that in general we're seeing increases. So instead of a home being gone within a week, we're usually seeing a home sit on the market anywhere between 2 to 3 weeks, and sometimes even past a month for some of these locations. So something to just kind of keep in mind. And with that, we're also taking a look at the alternatives for people. So right now, it is still much more expensive to buy a home. So one of the things that is happening right now is that about 15% of the first-time home buyers are basically getting priced out of the market. And this is because the interest rates are continuing to rise. With the Fed having, I believe, 3 more meetings by the end of the year, I have a feeling that we will see that continue to go up, depending on what they do. But we are definitely heading into a recessionary period, so we'll see what happens to those rates after that said recession. So if we're looking at Portland, the market action index has decreased significantly. This is a huge reminder to sellers that it is no longer just something where you can throw a property online and you get it sold very quickly. This is where having some actual strategy and having good marketing is going to be very, very key, and also making sure that your property is up to snuff and is something that you can put in as much effort as possible to get the most bang for your buck. If you're wanting to be a little bit more aggressive or things of that nature, just something you have to be looking at that price as well. So we're down to 51, and if we're looking at this, the median days on market has grown to over a month, which is really great for buyers. We're also seeing kind of a decrease in prices. Now, mind you, this is kind of in correlation with the interest rates because of the fact that they have been climbing so steeply. We're kind of seeing a drop in this median list price. With that, we're also seeing a large amount of price decreases because a lot of times the seller's expectations are very delayed from what the market is. And this is one of those things where if you want to price your home aggressively, you should definitely do that initially because the longer your home stays on the market, the less eyeballs it gets. Typically, there's a large spike right before or right when you put it on the market, and then over time, they typically will go down unless there's a very large price drop or something of that nature. So just something to kind of keep in mind. We're also getting a lot more inventory. So something where it's really good to see buyers having options now and being able to actually think of what they want. And really, the interest rates have sucked out the urgency a lot of buyers have had. In the early spring, we saw that everyone got the memo that rates are going up. And that really put a lot of pressure on those buyers to buy sooner rather than later, which caused a lot of bidding wars. Now we're seeing a lot more negotiation and a lot more sellers being open to negotiation. So especially with those repairs. Now we're looking into Beaverton. Inventory is going up as well. Again, we used to see earlier in the year close to 98 on the market action index. Now this is something where we have significantly gone down, and this actually is a great time for buyers to actually buy a place. And even if you're maybe at a 3.5% FHA loan, you still have a chance because these homes are sitting on the market for a while and sellers are still willing to negotiate for repairs and things of that nature. You don't have to be quite as aggressive. I'm not seeing as many appraisal gaps or things of that nature. Same thing kind of goes for the price decreases. We're seeing close to 50% of the homes listed have price decreases. So just something to kind of keep in mind. And then these median days on market are still, this 28 days is close to a full month. So something to kind of keep in mind. Hillsboro is a similar situation, maybe a little less price decreases. And then again, the market action index is greatly decreasing. So we're going to probably see this continue to decrease over the next couple months. I'm expecting a lot more listings to really start popping on in early September, and then see them kind of peter off probably by the end of mid-October. So just something to kind of keep in mind. Maybe end of October to early November. Actually, this is probably going to start petering off. So that's just something to kind of keep in mind. And we're starting to just really see the same story in a lot of these different areas. Tigard still has, it's pretty low market action index wise. The price decreases are again close to that 50%, and we're starting to see those, the inventory rise. So again, Tigard doesn't have a ton of inventory, but just one of those things to kind of keep in mind. And then Milwaukie is actually seeing a lot more price decreases at 54%, but the median list price is going down. Again, all indicators that we're still moving towards more of a buyer's market. We're not in a complete buyer's market where houses are sitting on the market for 3 to 6 months, but we're definitely starting to move there. Although Milwaukie still has a pretty strong market action index, so just something to kind of keep in mind. And then as we're moving into the Gresham area, we're starting to see those median list price go down. And remember, this is going to be the list price initially when a home comes on, so sellers are being a little bit more aggressive. And then we're starting to see the median days on market. Again, we're starting to see houses sit for 3 to 4 weeks sometimes. So just something to kind of keep in mind. And then like Oswego, this is one of those things where it's a much higher price point. So the median list price is $1.35 million. And then we're starting to see those days. Some of these houses are sitting on the market for close to 60 days. And it's, again, one of those things where there's a different buyer pool for this area because of the median list price. So with all that said, some things to kind of take for buyers is that now is a good time to be buying. The interest rates will probably continue to rise until we really get probably another quarter of a recession or negative GDP, and then we'll kind of have to see where that goes. But with that, you're going to be able to negotiate a lot more with sellers. You're not going to be coming way over list price, and one of those things where you can negotiate some repairs in terms of maybe the roof needs to get fixed, or there's a septic tank, or there's an oil tank. There's things of that nature that you can really negotiate with the sellers. And sometimes if you're maybe earlier on the road to jump on this and kind of push some sellers to buy a little bit sooner or accept an offer sooner, they might be up for that. But just know that typically when a home comes on for that first week and it sits for that second week, that second week really is where sellers get a little bit more antsy. And if you had a full price offer that came in and basically just a very vanilla offer for the most part with a 10-day inspection period, you can probably get it accepted a lot of times because it's right before they might do a price drop, or there might be other options for you. So just kind of depends on the situation. It depends on the house. So just something to kind of keep in mind. But the instant that we have another offer on a place, that's where the game changes entirely. But if the home's been sitting on the market for a couple weeks, then they will probably be open to a little bit more negotiation and understanding where price is different. And this is also switching to the listing side of things. As a listing agent, you really did not have to do too much for the seller when you were selling homes within the last couple of years. The reason being is because there's been such high demand. And now is really the time where sellers, you should really be interviewing those agents and making sure that they do have a lot of eyeballs on it, and also being extremely realistic with the price. And this is one of those things where if you're wanting to sell sooner, then you're going to want to price very aggressively. and is one of those things where you might have to be open to seller credits. One of the major things that is happening now is sellers are now offering seller credits to buy down rates.
What?
And this essentially helps the buyer to have a mortgage rate maybe for the first year or two that's a little bit lower, and then over time we'll probably see where that is at, so those buyers could then refinance to maybe a little bit of a lower rate of where they're at. So just some things to note, and if you ever have questions about that, feel free to reach out as well. So if you found any of this content helpful and you think that you learned just a little bit more about the Portland market and where it's at right now, then it would be awesome if you could hit that like button and then also subscribe for any more content. If you have any other questions, I'll make sure to leave my contact information down below. And otherwise, thanks so much for watching, and I'll see you next time.